Okay, today I'm selling a covered call on CTXR, Citrus Pharmaceuticals. I already have two covered calls that I sold when Citrus, the stock itself was higher priced. Seeing as how my average is still over $2. See, I bought it originally, it's probably sitting around $2.50, so I was selling covered calls on it. It was closer to that price. So that's why I have two cells at $2.50. I got $10 each. If I went to make that same trade today, they're just nobody's buying them. Nobody wants that deal. It's a bad deal. But I still have two cells. That's what that negative means. I have two cells. That means I sold two contracts. I don't know who has them, but whoever holds the contracts, they have the right to buy 100 shares per contract at $2.50 per share strike price. That's called the strike price. Now that's a good deal for me because my original cost basis was actually lower than $2.50 to begin with, and now I've been buying the dip and it's a lot lower. So this is a great low priced covered call for beginners if you want to start out. So I just bought the dip. It's at 184 right now. So that brings my cost average down to 205, which is a lot better than when it was around 250. Okay, I'm still negative on total return, but when you consider the potential that I have to sell covered calls, then I believe that this stock is going to go up. It's got very bullish ratings, quant ratings, and Wall Street analyst ratings. So that's why I've been putting so much money into this. Plus, the option deals are really good. So I'm going to go ahead and make the trade. I'm going to try something a little bit different. Someone made a suggestion, and I've been selling them at the closest expiration date. Basically because I feel like it gives me more room to roll it over to the next date, which makes sense. But as you see, the farther out you go in date, the more money you're gonna get out of it. Premium. All right. So the farthest out we have here, February 18th, 2022. Also, keep in mind that the people buying these contracts, they believe in this stock. They think it's going to go over 250. So no matter what, if somebody executes this contract, you are still going to come out ahead because you'll be selling it to them at $2.50 per stock, right? And you bought it. Well, right now it's 184. So you're still making a huge profit if they execute it. And if they don't, it's called, the term is being assigned. So if you're assigned on your contract, you're making pretty good profit off of that in addition to the premium. But we're mainly after the premiums right now. So let's just focus on the premiums. I'm going to go ahead and try what's called a LEAP. I'm not exactly sure what that stands for. I know it stands for something, but basically what it means, it's a farther out expiration date. I've done a couple of them, but I don't focus on those. I'm going to try one today just to demonstrate for the video. So let's go ahead and make this trade. It looks like the last sale was for 40 cents. But there's also 100 people trying to make the same trade at 40 cents. There's a lot of people trying to buy them at 35 cents. So the mark 37.5 cents, or yeah, 37.5 cents. Okay. Now the break-even price, that's another thing to pay attention to. That is okay. So if you sell it at the mark, if you sell this at the mark, and let's say CTXR goes above 288, that means that you're losing money on it. Well, not necessarily losing money, but leaving money on the table. Okay. And if it stays below 288, that's just all extra profit. And no matter what, you're not going to lose money on this trade if you're assigned on this option, because you bought it less than the strike price. So this is just a win-win situation. Very safe trade. Very safe. Potential for good money at, a little bit of just low, very, very low initial investment. Okay, that's what I like to do with my options. I like low price stocks so that I can do more of them. I don't have tens of thousands of dollars to play with. I like to do options on they're good stocks, they're good companies, but they're low priced. Okay, so let's go back to that screen. Oh, look at that open interest too, 20,550. That is the amount of open contracts right now. That's how many. That's how many people are out there holding this contract. Okay. The volume, that's today's order flow. So this is actually pretty what's the word, popular, pretty popular. Okay, let's go back there. I think what I'm gonna do, I'm gonna try 38. I like to put in good till cancel, just so I don't have to reset this every day. All right, now I'm gonna leave it at 38 and see if Robinhood will let me do it. Nope, telling me to go down to 35. Okay, so in this case, I don't think I want to sell it that low. I'll tell you why. Right now, Citrus Pharmaceuticals is in a dip. It's pretty low, pretty damn low. And generally, when it goes up, this contract will sell for a lot more too. Okay, I don't want to sell it today. I'm not stressed about that. I don't need it right away, but I'd rather get a good deal on this than to have it, just executed and that cash sitting in my account. So I'm just gonna change this to 40. We could go higher, but I think 40 right now seems safe. All right, so this is gonna just be a placed order whenever there's enough buyers at 40 cents. Hopefully I'll be one of the ones that sells it.